welcome to our live session again today, and thank you for joining us. And joining us is themba Mazibuko, the financial coach. If you have any questions that are relevant to our conversation this afternoon, you can type in the comment sections. And if you have a comment that is relevant, you can also type in the comment section. And thank you again for joining us. Please share the video, invite somebody so that we can grow together. Themba, is there any financial news for us in this week?
Thanks, Tafadzwa, and I'm so much looking forward to the show today. Since it's the beginning of the year, there hasn't been much in terms of business news, but I would want to bring to the attention of our viewers, just three things from the Africa front, and also three things probably from the global front. Let's start with the global front, and I will put you on the spot here, Tafadzwa. Which one is the most valuable company in the world? Which company do you think is the most valuable, the most expensive company in the world at the moment? Just putting you on the spot. I hate to do this.
Valuable in what sense?
The most valuable, isn't it that companies are listed on a stock exchange somewhere and there is a price attached to the shares of the company? So the worth of a company can be calculated based on the price of the shares. So which one do you think is the most expensive in terms of market value of all the companies in the world? So you've got companies such as Google, Microsoft, Apple, Coca-Cola, and all of these big companies. Which one do you think is the most valuable?
I'm not very good at guessing.
Not very good at guessing. Sorry for putting you on the spot, Tafadzwa. I'll put you on the spot again on one other question. But I think in this week, I saw business reports to the effect that Microsoft is now the most valuable company in the world. It surpassed the market valuation of Apple. So for a long time, Apple, which is the maker of iPhones, iPads, was the most valuable company. And then Microsoft, overtook Apple. It's essentially because there's been concern around the demand of the iPhone, the new iPhone. So Apple, lost a bit of a little bit of, the stock price went down. But from a Microsoft point of view, there is quite a lot of excitement with Microsoft's investments in artificial intelligence. So you would know that Microsoft has invested in ChatGPT. And because investors are very excited about artificial intelligence and what have you, their share price went up and resulted in Microsoft overtaking Apple as the most valuable company in the world. What does that mean in terms of this year, 2024? I think what it means is that there is a lot of excitement around artificial intelligence. That's what I can see. It seems that this year and the years beyond, we will be talking about artificial intelligence. The second piece of global news is something that I picked up yesterday and today. Tafadzwa, you would know that there are all sorts of conflict in the world. And yesterday, I think some rebels in Yemen, the Hutu rebels in Yemen, they attacked a number of ships there. And the reason why they are doing that is basically to bring some form of disturbance in global trade. So as a result of the attacks, of ships on the Red Sea, we saw crude prices rising up, yesterday. And, if I look at that strip, I think it accounts for something like 12% of global trade. So I think there are two implications of that going forward. The first implication is that, oil prices are going to be very unstable and going to be a function of global conflicts. In fact, the way I look at it, because of the heightened geopolitical risk, I think there is a possibility of oil prices, going up. And as we know, if oil prices go up, then inflation is likely to go up as well, the rest of the world. And I think we saw an immediate impact of, those attacks. Tesla, which moves some of its products around, they reported that they had closed their factory in Berlin because of the logistical, challenges in moving their products, around. So there is no question in my mind that if there is conflict, heightened conflict, particularly in the Middle East, it's going to result in global shipping rates going up, and as a result, inflation also going up. Another piece of business news that I would want to bring to the attention of our listeners, particularly from a global front, is that US inflation in December came in at 3.4%, up from 3.1% in the previous month, November. What it just shows is that inflation is not yet under control. And because inflation is not yet under control, don't expect interest rates to come down, very, very soon. Because of geopolitical risk, which may result in oil prices going up, it's unlikely that inflation will come down very quickly. If I look at how they manage the US economy, they target inflation at 2%. And if inflation is coming out at 3.4%, it means that central bank officials will be a little bit hesitant to reduce interest rates, at least in the short term, until they are comfortable that inflation is under control. So to all of this, to all of our viewers, don't expect interest rates to come down very soon. They will only come down after central bank officials are very comfortable that inflation is under control. Let's come to the Africa front. Tafadzwa, let me put you on the spot again. I hate to do this, but let me just see if you'll get this question this time around. Who is the richest person in Africa at the moment? Who is the richest person in Africa? The richest billionaire in Africa? Take a good guess. Or you're going to tell me you're not good at guessing again?
Unfortunately, I can't go to Google, but I think it's this Nigerian guy with this company sells oil, I think. It just slipped me. But
And what is the name of the Nigerian guy?
the name just slipped me, but I know him.
Oh, okay. No, that's good. His name is Aliko Dangote.
Yes,
So
yes.
at the beginning, at the turn of this year, at the beginning of this year, I think Johan Rupert was the richest person in Africa. Johan Rupert is a South African. That's what Forbes was reporting. And we knew why he had dethroned Aliko Dangote. It's because of the devaluation in the Naira. But things changed between the 4th of January and the 8th of January. I think there was a little bit of strengthening in the Naira. So Aliko Dangote is back to being the richest person in Africa. At the beginning of this year, Tafadzwa, I've got this habit of just going through the Forbes list of billionaires. So I was looking at the global list of billionaires and also the Africa list of billionaires. And as you would know, Elon Musk is the richest person in the world with a net worth of something like 236 billion, dollars. And I was going through that list, Tafadzwa, and two things really caught my attention on that list. The first thing is that almost everyone in that list, probably except for Warren Buffett, almost everyone on that list except for Warren Buffett is actually a tech or was a tech entrepreneur. Um, uh, Years ago, when I used to study this list, we used to have people with inherited wealth, such as the Waltons who own Walmart. I think they have fallen down the list. So you're not likely to get to the top of the billionaire list with inherited wealth. Most of these people who are here are entrepreneurs, people who have done something, particularly in the tech world. And I think it's mostly going to be, like that, going forward. So that's just the first thing that caught my attention, that the people who are on this billionaires list, if I look at the top 10, for example, almost all of them, except for Warren Buffett, are actually tech entrepreneurs. The second thing that caught my attention is that 9 out of 10 people on this, global list of billionaires are from the United States. It's only Mr. Arnault, Bernard Arnault, who is the second richest person in the world, who is from France. All of them are actually from the United States. What it just says to me is that there are certain territories in this world where it's possible to make real money. And there are certain territories where it's almost impossible to make real money. So what it basically means to everyone who is listening to us, if you aspire to be on such a list, just make sure that you are in the right country. Because there are certain countries where it's very, very difficult to be on this list. The other thing that caught my attention, on this list is we've got somebody like Steve Ballmer, who used to be the CEO of Microsoft, who is number 10 on that list with a net worth of 104 billion. Obviously, because Microsoft is doing well and its share price is going up. But he isn't really an entrepreneur. He was an employee in a certain company, in Microsoft, but he was able to negotiate his package in such a way that he was paid in shares. So that's one thing that he did. The second thing that he did is that for a long time, he didn't sell those shares and he held on to the Microsoft shares until now. Microsoft is the most valuable company in the world. And that takes him to number 10 on the list. He is probably the richest employee on that list and probably the richest employee ever. So what it says to me is that it's also possible to be on such list as an employee, provided number one, you negotiate very well and you are paid in terms of the shares of the company that you're working for. And secondly, you hold on to the shares. It's unlikely that you are going to be on such lists if you are selling shares here and there, trying to make a living. Most of these people have held on to their stakes until they realize the full value of their stakes. It also says something to us as investors. If you are invested in a stock which is doing very well and has got potential for growing, hold on to that stock. Don't sell it. There are people who have sold their stakes, and because they have sold their stakes, they haven't made that much, wealth. And a comparison that I can make is between Warren Buffett and Charles, Munger. Charles Munger, who died at the age of 99, he was also Warren Buffett's partner in Berkshire Hathaway. He sold quite some stock of the company, and as a result, never really got to, this particular list. So I just wanted to say something about those of us who aspire to be billionaires, at some stage. It's quite interesting to read some of these lists and see the patterns that are there. Similarly, when I look at the Africa's list of billionaires, the top 10 billionaires are from South Africa, Nigeria, and Egypt. That's where these billionaires are being minted. And then there's the outlier, Nathan Kish, who is from Swaziland. He's the only billionaire in Swaziland, there. Two other pieces of news that I would want to bring to the attention of our listeners. Number one, we did project at the beginning of this, or in fact, at the close of last year, that indebtedness among countries would be an issue. I think the news that I got in this week is that Ghana as a country seems to be making headway in terms of restructuring their debt. Some of you would know that Ghana defaulted on its, international debts. I think they are making headway in terms of restructuring that debt. And the news that is coming out is that they may be due for a bailout to the extent of 600 million from the IMF, in the form of debt relief. So that's quite some good news, there, which hopefully will be received well in Ghana. And then in South Africa, Amazon is coming to South Africa, Tafadzwa. Amazon is coming to South Africa. Amazon, this big um, e-commerce giant, is coming to South Africa. In South Africa, the e-commerce market is dominated by companies such as Takealot, and it would be interesting to me to see how competition will change once Amazon, comes to South Africa. Takealot is owned by Naspers, and one of the things that I picked up from business news is that Naspers is investing quite a lot of money in Takealot in preparation of Amazon coming to town. And people are projecting that once Amazon comes, we are going to see a pickup in South Africa of most of the retail transactions being done via e-commerce. At the moment, e-commerce accounts for something like 4% of all retail transactions. So it's something that I'll be watching out for. It's always interesting to see how some of these big players will compete in markets such as South Africa. So in conclusion, Tafadzwa, I think inflation is continuing to be stubborn. Don't expect interest rates to come down, soon. Artificial intelligence will be a buzzword in 2024. And it looks to me like those tech companies that are at the cutting edge of running with AI, those are the companies that are doing very well. It's all about entrepreneurship. It's the entrepreneurs that are going to create wealth, going forward. Inherited wealth will take you to some extent, but it's the entrepreneurs that are, growing the wealth. I think those are the themes. Let's watch out for crude prices. I think geopolitics is impacting on the prices of oil. So it's something to watch out, going forward, and it's contributing to inflation. I think that's what I wanted to bring to the attention of our listeners, Tafadzwa.
Thank you for that interesting information. I think I'll also be diligent in checking out the billionaire. So the next time if I'm asked on the spot, I will just give it to you like that.
Well, it depends, Tafadzwa. Are you aspiring to be a billionaire?
I would love to, maybe before I die. Like, I think it would be good to just have $1 billion in the account.
The other thing that I'm talking about the Uber, the ultra rich, so we're talking about the top 10. Obviously, there are many women billionaires, that we can talk about. But in the top 10, what is interesting to me is that all the names there are actually males. So that's a huge challenge, for women. There. I'm looking forward to seeing women making it to the top 10 of this billionaire list. Maybe you'll be the first woman, who knows?
I received that. I hope you're seeing in the future. Will Robinson says financial fitness is not a pipe dream or a state of mind. It's a reality if you're willing to pursue it and embrace it. Themba, what is financial fitness and why is it important?
I think the reason why we decided to talk about financial fitness today is that at the beginning of each year, I see people flooding the gyms, because they want to be physically fit. They want to look good. And one of the questions that some of these gym instructors will ask you when you go to join a gym is, what are your goals? Do you want to lose weight? Do you want to be, fit physically? Do you want to have a well-toned body? So I think you have to tick, there. And, we want to draw parallels between physical fitness and financial fitness. I think because it's the beginning of the year, we need to ask the same question. Do you have financial fitness goals? So when we talk about financial fitness, we're talking about, aspects such as, how large is your emergency fund? How much debt do you carry? Because the more debt you have, the higher the risk of insolvency, in your life. Do you have goals towards financial independence? All those questions contribute to what we would call, financial fitness. In today's discussions, we want to focus on what I call financial fitness indicators. So, for example, if you're talking about physical fitness, you can look at indicators such as the amount of fat in your body. So if you've got a lot of, body fat, then you are obese and you are not fit. Um, you know, physical fitness has to do with the amount of muscle that you have on your body. And that's what we are also talking about, here. You asked me the question, why is financial fitness, important? I think it's important because it brings stability, it brings independence, and it facilitates the realization of personal and professional, goals. It's only the financially fit people that are going to be truly happy in this world. Because if you are not financially fit, you've got debt in your life on your balance sheet, then it impacts your wellness. So financial fitness is very, very important because it's directly correlated with your wellness as an individual. If you see some people that have got depression issues, some of these issues may be linked to the state of their finances. So at a personal level, I think financial fitness is very, very important because it's linked to your wellness as an individual. It's also linked to how you're going to realize your goals. What I have found out in life is that it's probably only the financially fit people that are truly going to realize their goals. Here I'm talking about goals such as traveling and seeing the world, goals such as contributing to charity. It's only financially fit people that are going to be able to, do that. Financial fitness is also very important because it it determines, sometimes whether you're going to get a job or not get a job. The final steps in approving people for certain positions in the world of employment is looking at their credit record. I have come across people who are well qualified, but because their credit record is not that good, they didn't get the job. So financial fitness also, could have an impact on whether we're going to get that dream job or not get that dream job. For some of us who are investors, I think a credit record is very, very important because it determines whether you're going to find finance to finance that particular investment that you will have. Here is my advice, Tafadzwa. I have indicated that inflation is going to be stubborn. I have indicated that interest rates are not going to come down, very quickly, particularly in this year. I've also indicated in a previous conversation that the full impact of interest rates rises in 2023 is going to be felt in 2024. So it's likely going to be the case that we are going to see some properties being auctioned, some houses being repossessed, some cars being repossessed. I think we're going to see it. And I think it's only the financially fit individuals who will be able to pick up these assets at reasonable prices. So that's why financial fitness is very, very important. So just to summarize, Tafadzwa, financial fitness is about setting goals. And here we're talking particularly about the goal of financial independence. Financial fitness is about managing your debt. It's about saving for emergencies. It's about, having a little bit of money set aside to treat yourself, to embark on that dream trip that you have always wanted to go on. All those aspects, contribute to financial fitness, Tafadzwa.
Thank you very much for that. Financial fitness is important because you may not get that job, that dream job you want. And also, it also helps, like, yes, I've also seen lately, like in the newspapers, there are many properties being auctioned. So if you're financially fit, it's an opportunity at least to get a property on bargain. You have made parallels between physical and financial fitness. I know there are indicators for physical fitness. What are indicators for financial fitness?
Thanks for that question, Tafadzwa. So what I would want to do now is just to give, to run down a list of some indicators that our viewers can actually use to determine whether they are financially fit or not. I've given an example of, in the context of physical fitness, the amount of fat on your body. So somebody can go and let you do an exercise and come up with an index that will say whether you're physically fit or not. So I would want to start by discussing some of the 3 indicators that you can use. When you look at your finances, you can do certain computations, and those computations will actually tell you whether you're financially fit or not. The first indicator that I would want to bring to the attention of our listeners is the debt to disposable income ratio. The debt commitments to disposable income ratio. Let's just say, Tafadzwa, you earn 100 rands. So 100 rands is the amount that comes into your account, say, as a salary on a monthly basis. Let's just say you calculate all your debt commitments. In other words, all the amounts that you have to pay on a monthly basis to service your debt. Let's just say that amount comes to 60 rands. So every month you have to pay 60 rands to service all your debts, and the amount that comes into your account is 100 rands. Then your debt to disposable income ratio is 60%. So if I look at the average ratios in South Africa at the moment, it's around 62% or thereabout, which means that South Africans are highly indebted. So debt to disposable income ratio is the first indicator of financial fitness. Our objective, particularly in this year, is to reduce this ratio to something like 30 to 35%. So I do not want you, if you are earning 100 rands as disposable income, to spend more than 35 rands, servicing your debt. That's the first indicator. If your ratio is going above 60%, just know that you are highly indebted, and it's time to take, corrective, action. So that's the first indicator of, financial fitness. The second indicator of financial fitness is the amount that you have reserved in the emergency account. So here, we've always advised those that listen to us that you must have a dedicated amount of money, which we are calling the emergency fund, to take care of instances where you've got an emergency. So the size of that emergency fund should be 3 to 6 times your monthly expenses. So again, let's just assume that your monthly expenses is 100 rands. You should have at least 300 rands in a dedicated account. If you can get up to 600 rands, that would be great, because emergencies will happen from time to time. So let's just assume that you do not have an emergency account, at all. You live from, paycheck to paycheck. There is no amount dedicated, for an emergency account. Then you are not financially fit. You have to work towards, financial, fitness. The third indicator that I would want to put on the table is a growth indicator. So here you are comparing your household income in 2023. Probably you compare it to the household income in 2022. Right? You would want to see by how much that household income amount has grown by. Let's just say in 2022, you were earning 100 rands. So I'm working with 100 rands because it's easier to illustrate the points with 100 rands. Let's just say your total household income was 100 rands. And in 2023, you managed to grow that household income by, let's just say 2 rands. In other words, your household income was 102 rands. What it means is that your growth in household income was 2%. Now, when you take that amount, you need to compare it to the amount of inflation in 2023. So let's just assume that in 2023, the average inflation in South Africa was, 5%, and your household income grew by 2%. What it effectively means is that you are going back. You are going back very fast, and you are losing the battle against inflation. Because I've always indicated to all of us that in this race of making investments, we've got 3 enemies. One of our biggest enemies is inflation. You have to win the battle against inflation. The second enemy that we have is taxes, right? So you mustn't pay more taxes than is necessary. In fact, you must optimize on your tax bill to the extent possible. And then the third enemy is costs, right? So we're asking the question, are you financially fit? And to answer that question, we need to ask the question, did you win the battle against inflation in 2023? If inflation was 5%, by how much were you able to grow your household income? If you were able to grow your household income by something like 10% or 15%, then it means that you achieved real growth on your household income. And therefore, you won the battle against inflation. Because for you to be financially fit and to make progress on a yearly basis, you need to be winning the race against inflation. You need to be winning the race even against taxes and against other costs, as well, which is very, very, important. So the third indicator is a growth indicator. By how much did your household income grow when you compare to inflation? And did you win the battle against inflation? By the way, this also applies to when you are running a business. When you are running a business, you should have grown your revenue in 2023 ahead of inflation. And this week, Tafadzwa, I had a strategy session with my team in our business, and we're just reviewing our results for 2023 as a business. And guess what we found out? Not that we didn't know, but it's something that we had to celebrate. We actually grew our revenue in 2023 by 152%, which means that we more than doubled our business from a revenue point of view. And that's good. And that's an indicator of financial fitness. It means that you are winning the battle against inflation and you are growing. So the thing about managing finances, it doesn't matter whether you're managing the finances of a country. Imagine you're managing the finances of a country. You should grow the economy by more than inflation. And you should grow the economy by more than the population growth. So if you're managing a country and GDP is actually growing at a slower rate than the rate at which the population is growing, which is the case in South Africa. So from an economic point of view, when we look at that metric, when you look at South Africa as an economy, you could also be tempted to conclude that the economies of the country are not financially fit. Why? Because you've got a situation where the population growth is higher than the rate at which GDP is growing. It means that GDP per capita is getting smaller and smaller. So those are the three indicators that I would want to bring to the attention of our listeners, at least for now, so that once you begin to look and assess where you are, because progress, Tafadzwa, begins when we assess where we are currently. And then when we know where we are, we can then begin to set goals, going forward. So, for example, when it comes to negotiating your salary, you should negotiate in such a way that you always get an above inflationary increase, because then there is every possibility for you to be financially fit. You should actually get rid of your debt so that you can reduce your debt to disposable income ratio, and you should increase your emergency fund to the level that is acceptable. Over to you, Tafadzwa.
Thank you about that. I have a question on emergency funds. You say emergency fund must be 3 months of your salary. How does one work it out? Because every month you get you get a salary which already has expenses to be deducted, and you pay your tithe, you put some to investments and expenses. So where would one find money to have a 3 months? Because from day one, when you get your salary, those things are there. You have expenses. And sometimes life happens and even take money from the emergency. How can one get to have 3 months?
Very good question, Tafadzwa. That's a very, very good question. So let's work with simple numbers. I will work with 100 rands again because it's easier to make the point with 100 rands. Let's just assume that your salary is 100 rands. That's what you get. If you want to be financially fit, and this is what financially fit people do, they have got habits. Isn't it that if you want to be physically fit, you have to have a habit of going to the gym? You can't just miraculously develop muscles without having certain habits that are entrenched in your lifestyle. The same is true of financial fitness. And later on, I'll talk about financial habits that must be embedded in your lifestyle for you to eventually be financially fit. And one of these habits is always managing your expenses with a budget. So budgeting is a habit of financially fit individuals. They always manage their expenses with a budget. So let's just assume that we are budgeting 100 rands. What does a financially fit individual do? Number one, they pay themselves first. That's a very important habit of individuals that aim for financial fitness. You don't pay your creditors first, you pay yourself first. So, what we advise is that if you're earning 100 rands, 10 rands goes towards investing for your future. Another 10 rands goes towards giving or tithing, right? We advocate for tithing on this platform because we think that tithing is a very powerful force that contributes towards financial prosperity. It's a very, it's a powerful force in terms of prosperity. So if you've got 100 rands and you have separated 10 rands for investment, you've separated 10 rands for tithing. It means that you are left now with 80 rands, right? Your lifestyle should be built around 80 rands because that's what you are left with. So if you are building an emergency fund, we are basically saying that you must build an emergency fund that will accumulate up to 240 rands because it should be at least 3 times your expenses. So I've indicated one habit of financially fit people. They pay themselves first as a matter of habit. Habit number 2 is that they live below their means. So if you're earning 100 rands, you must never have expenses that exceed 120 rands because you're not a government, you don't print money. It's only the people that can print money that can have expenses above their salary. You don't print money. And therefore, your expenses should never be above 100 rands. If you get into the habit of spending more than you earn, you are going to be the most unfit person financially ever. Right. So how do you then make sure that your expenses are below, 100 rands? If you have bought a big house or a big car that you can't afford, downgrade. And this is one of the advice that we are giving to our listeners and to our viewers in 2024. Downgrade if you are struggling. In fact, downgrade before even the bank gets to you, and look me in the eyes and listen very carefully. If you are struggling in your finances, downgrade before um, before the bank gets to you. I always advise people only upgrade after you've received at least 2 salary increases. Don't upgrade before you have even spent your salary increase, which is what other people do in their life. So I've spoken about 2 habits, so far. Pay yourself first, live below your means. Let me just speak about 2 other habits because financial fitness is not a miracle. It's a consequence of certain entrenched habits in our lifestyle. So another habit is that don't be conspicuous in your expenditure. When I talk about people that are conspicuous in their expenditure, I'm talking about people who want to make a statement in their expenditure. So they want to keep up with the Jones. They want to, they want to wear the branded clothes and drive the fancy car. Fancy cars, I'm for fancy cars, I'm for branded clothes. But here is my thing. You finance branded expenditure out of passive income. You don't finance it out of earned income. So I don't want anybody buying, branded clothes from your hard-earned salary. Your hard-earned salary should prioritize generating a stream of passive income. Once you've generated that stream of passive income, then you have earned the license to go into luxury expenses. And that's the thing about financial fitness. So don't be conspicuous in your expenditure. By the way, even tax authorities, as a matter of principle, if they want to see the tax dodgers, They look for the people that are conspicuous in their expenditure. The other habit that I want to talk to us about is that never borrow to consume. Financially fit people don't borrow to consume. It's not as if they don't borrow. They borrow, but when they borrow money, it's for investment purposes. They are not borrowing money to buy food. They are not borrowing money to buy clothes. So one of the easiest ways of being financially fit is opening a clothing account. I don't advocate for clothing accounts. I don't advocate for any expenditure which is, consumption related. When you borrow to buy assets that are likely to appreciate in value. You borrow for productive purposes. You borrow and get a tax deduction for it. If your borrowings do not have tax deductions associated with them, it's not a good borrowing. Trust me. So it's not as if I am saying don't borrow. I'm just saying don't borrow for consumption, because borrowing for consumption, we've been talking about countries that are in trouble, and in our discussions we spoke about 3 countries in Africa that could not pay their debts. I think we spoke about Zambia, we spoke about Ethiopia, and we spoke about Ghana. I can almost tell you, if that borrowing that those countries did was for infrastructure, was for investment purposes, there would have been an income stream associated with it. But sometimes people just borrow for consumption and they have nothing much to show for it. So I've spoken about these habits of financially fit people, which needs to be embedded in our. So to answer your question, Tafadzwa, I know I've taken time to get to your question. If you get into the habit of separating 10 rands out of the 100 rands that you are earning, initially, you are going to use that 10 rands into building the emergency fund. So if the emergency fund is to go up to 240 rands, from our example, it means that it's going to take you 24 months to build that emergency fund. So in short, an emergency fund is not something that I would want you to build overnight. That's not what I'm saying. I'm saying you must have a discipline in life, because financially fit people are disciplined people. They are not those people who want to get rich quickly. If you show me a person who is going to get rich quickly mentality, I can almost show you a person who is financially unfit. That's the long and short of it, Tafadzwa. Hopefully I've answered your question.
Thank you very much. Yes, indeed you have. I've heard others saying, fake it until you make it. With the branded clothes, you can also buy from China. Though the other challenge is, one thing I've also seen about the cheaper versions of the branded. Now they can mix, Gucci and Louis Vuitton on one jacket. So those are some of the disadvantages. If you can't afford and you want to fake it until you make it, you may find yourself wearing the wrong brand, but at least you'll have tried. Thank you very much for that. And I think you've emphasized that. I like the point that you say that if you're not a government and you don't print money, don't spend more than your income. I think that one is a takeaway. I always remember when I'm getting excited and doing impulsive buying, then I remind myself that I'm not a government. I should keep it within the budget. Are there other indicators besides those 3 you have mentioned?
Yes, there are the indicators that we can introduce, Tafadzwa. So just to recap, we've spoken about the debt to disposable income ratio. We've spoken about the size of your emergency account or your emergency fund. We've also spoken about the real growth that you are experiencing there. Another indicator that I would want to introduce, here is the amount that you are setting aside for investments out of your budget. When you start with 10% and then you increase it over time. So I would want to ask you, how much are you setting aside for investment for the future? Here I'm talking about over and above your pension funds arrangements. If you're working, you would have the company deducting some amount, for your pension fund. That's not what I'm talking about. I'm talking about what you are saving for the future for yourself. What is that percentage? So you should grow that percentage over time. Initially, you start with 10%, then you go to 12%, then you go to 15%, 20%. So that you can save for your future, so that by the time you retire, you have got an amount, saved, for retirement. Related to that, Tafadzwa, I spoke about, and I said that financial fitness is about setting goals. So financially fit people set goals, and I would want to ask you the question, not you, Tafadzwa, but ask anybody the question, when will you be retiring financially? I'm not talking about retiring from your job. I'm talking about retiring financially, which brings us to the fifth indicator. So the fifth indicator is the ratio of your passive income compared to your total income, right? Remember, Tafadzwa, I don't have time to go over it again, but we've been speaking about three types of income. End income. End income is income that you sweat for. That's good. When you start working, you start with end income. But over time, you must convert that end income into a passive income stream, which is why we are saving at least 10% of our income for investment. It's because we want to create assets which over time will generate a passive stream of income. So if you want to see whether you're financially fit, Tafadzwa, I want you to look at the quality of your earnings. So the fifth indicator is talking about the quality of your earnings. If all your earnings that you are budgeting for is all end income, in other words, income that you have sweated for, you had to report to work to be entitled to that income, then you are not financially fit, because the income that you have is income of a poor quality. We've been talking about people like Steve Ballmer, who was an employee. One thing that I can tell you about Steve Ballmer is that he can afford to go and party the whole year of 2024. And by the time he comes back at the end of the year, he would be richer than he is, because he has invested in Microsoft. And Microsoft will keep up going in prices. So his income is not a function of the amount of sweat that he has to produce. And that's what we refer to as passive income. It's income that comes to you while least you are asleep. So the fifth indicator is talking about the quality of your income. What is that ratio? So it means, let's go back to our 100 Rand example again. If you are earning 100 Rands on a monthly basis and you've got zero passive income, it means that you are financially unfit as far as financial independence is concerned. Most of what we talk about on this show, Tafadzwa, is helping people to financially retire in 5 years. I believe with all my heart that if you manage your finances very well, you develop the right habits, you've got the skills to invest, and you're given the tools, it's possible for you to retire in 5 years, as long as you've got a stream of income, that we're talking about. I'm not talking about somebody who doesn't have a job. I'm talking about somebody who's got a stream of income. you can manage that stream of income, no matter how small it may be, to such an extent that it can grow, over time. The fifth indicator that I would want, the sixth indicator, Tafadzwa, that I would want to put on the table is the amount of money that you are giving to charity, to the church. Remember, you start with 10%. That's what we have said. And then you grow that over time. So I would want to have an indicator. If you're a stingy individual, you get 100 rands and you never give anybody that amount of money. I'm talking about giving to charity. I'm talking about giving to the church. Then you're financially unfit. It's a matter of time before things come falling off in your life. It's a matter of time before the wheels come off in your life. So the amount that you are giving is also an indicator of financial fitness. I've come across people in my life, Tafadzwa, who give a lot, but they never seem to get bankrupt. So don't have this amount, this idea that if I give a lot, I will go bankrupt. That's not how the world works. The world works in such a way that if you are generous, the money will come back to you. I don't have time to explain how it works, but that's how the world works. Let me just say one more thing, Tafadzwa, before I hand over back to you. I heard you talking about China City, and let me just clarify and here I'm talking about habits. We are not advocating for you to be cheap in your expenditure. So I'm not necessarily saying, when we talk about branded clothes, I'm not necessarily saying go and buy the cheapest brand out there. Even when you are buying household equipment, go and look for the cheapest. That's not the idea that we are advocating on this show. What I would want to embed as a matter of habit is this idea of life cycle cost. So if you are buying equipment, if you are buying shoes, if you are buying something that you can use for more than a year, I would want you to calculate the life cycle cost of that particular equipment. It's an idea that we will elaborate on in future shows, Tafadzwa. These are all idea of life cycle cost. So a piece of equipment may appear on the face of it to be expensive compared to another piece of equipment. Let me give you examples of cars. There are cars that are durable. On the face of it, if you look at the price tag today, that it might look like an expensive car, but it's the kind of car that you can use for 10 years. Then there is another car that sounds to be cheap, but then it will break down, and after 4 years, that car is finished. So when you look at the life cycle cost of the two assets, the car that you can use for 10 years, although it appeared to be expensive now, has got a lower life cycle cost compared to the car that appeared cheap on the face of it. So when you're buying equipment, when you're buying even clothes, there are certain clothes that are quite durable. It could be a jean, for example. It might look like it's an expensive, piece of clothing, but you'll be putting on that thing for the next 10 years. And so the life cycle cost is actually lower. So what we are aiming for here is to lower the life cycle cost, over time. There are shoes that I'm putting on that I've been putting on for the past 10 years. And that's fine with me. I'm trying to minimize the life cycle cost when it comes to shoes. And many people don't understand it, but it's part of financial fitness. You're laughing, Tafadzwa. All right. Our time is up. Let's conclude. Our time is up.
Yeah, I think I also don't understand the lifespan of clothes, but anyway, I think before we conclude, I was just thinking on this question when the question that was that when will you be retiring financially? With the retiring financially, is there like a specific time when you say maybe it's late. I heard a speaker saying if you buy a house at 50, it's not a testimony, because you're supposed to buy maybe in your 30s or in the 40s, but maybe you'll have bought the house in the 20s. Life happens. You lose whatever you buy. Then you find yourself at 60, you haven't regained the financial fitness status. Is there like, when you say, when will you retire financially? Because life happens. Sometimes you think you're there at 40, then maybe life happens, you lose everything, or you lose some things, then you have to start all over again. What are your encouraging words? Maybe to someone, at some point, they made it. Or probably they had investments, they had emergence funds, they had savings, they had assets. Then life happens. And they go to a place where they go to zero. And they are now under pressure. When you say, when are you going to retire financially? What do we say? I hope I'm making sense on what I'm asking.
You're making a lot of sense, Tafadzwa. Three things that I would want to say in answering your question. If you had asked me more about indicators, I would have given you a 7th indicator, but probably we can take it to another show, as well, and talk about this indicator. It has to do with the amount of insurance cover that you have. So it's an indicator that I would want to talk about, because if you've got assets and if you've got an income stream, anything can happen. You must protect that income stream, and you do that through insurance. So insurance is the mechanism that you can put in place to protect assets, so that you don't have this thing of losing assets and losing an income stream. But we'll talk about that indicator in the next show next week, Tafadzwa. So for today, let's confine ourselves to the 6 indicators of financial fitness. Then we'll take it over to the next session. So that's the first thing that I want to say. The second thing that I want to say, Tafadzwa, is that health is becoming the new wealth. So one of the things that I would want to communicate to our audience is that pay particular attention to your health. There is technology that is coming and that will come in the future that will enable people to live longer. And make sure you've got the kind of habits that will make sure that you live longer. The thinking that we have is that health is the new wealth. There is no point being a billionaire and then being sick and left with 1 year to live. There is absolutely no point. So pay particular attention to your health, because that's very, very important. The reason why I'm bringing the health issue is because I heard you, Tafadzwa, talking about what if you in your 30s you had assets and then you lose that and you are nearing 50. Look, if you are going to live up to 100, it doesn't really matter. But obviously, if you're not paying particular attention to your health and you will die at 60, then it really matters. So obviously, you have no control of when you will die. But to the extent possible, don't be careless with your health, so that you can enjoy the fruits of your wealth. And that's just something that I would want to put across, there. The third thing that I would want to mention is that I don't worry about somebody who made wealth and they lost it. Now they are about to recover. The thing is, what did you learn? We'll talk about this indicator, Tafadzwa, indicator of financial fitness. I've got 10 indicators. So far, I've given 6 indicators. And let's look at the other 4. But the other indicators that I would want to look at is the amount of financial education that you have. Because I can tell you now, Tafadzwa, with the amount of financial education that I have, even if I were to lose everything today, I can actually get it back within the next 3 years. And the reason, let me give you the reason for that. Let me give you the reason for that. A rich man was once asked a question years ago, and the question was, he was the billionaire at that time. And the question was, the reporter said, you are so wealthy. You've got so many billions. Why don't we be fair? Because there are people who are poor in this world. Why don't we take all the wealth in the world and then we divide it among all the people in the world so that everyone has got an equal share of wealth? And so that was the question that was posed to the billionaire by this reporter. And the billionaire said, look, it's probably a good idea, but what I can tell you is that within 48 hours, the people that had the wealth to begin with, that wealth that you have shared equally among the people will return back to them. And the people who were poor will be poor. So the reason why I'm saying this is that we must not be afraid of losing wealth and starting again. That should not be a fear. Because if your investment is motivated by fear and greed, because the kind of financial education that we would want to deliver is the education that will help people overcome the emotions of fear and greed. You cannot be financially fit if you are controlled by the emotions of fear and greed. You must not be afraid of bankruptcy, afraid of dying, because you're going to live a miserable life. Even if you were to lose all the wealth, because of the financial education and empowerment that you have, you will recover in a matter of time. And the maximum that I'm giving you is 3 years you will recover. So it shouldn't be a fear of whether I lose money, as long the important thing is to get financial education and to overcome the emotions of fear and greed. The people that are ruled by the emotion of greed tend to lose everything very fast. The people that are ruled by the emotion of fear equally don't do well as far as finances are concerned. But let's take it to next week, Tafadzwa.
Thank you very much. What would be your closing remarks?
The closing remarks that I have is that it's the beginning of a new year. Let's set financial fitness goal and aim to be financially fit. I would want to give you an assignment to everyone. We were working with 100 rands as an example today. Go and look at your finances, your monthly budget. Are you financially fit? When you look at all the 6 indicators, if there is an indication of financial unfitness in your life, then you need to set goals and move towards financial fitness, Tafadzwa.
Thank you, everyone who has joined us. We really appreciate you joining us. We hope we are implementing what we're learning, and we don't take it for granted. Thank you to those who are going to share the video. We appreciate. To contact us, you can visit our website on www.tafadzwamazibukospeaks.co.za. You can also like and subscribe our YouTube channel, The Dream That Is Worth Fighting For. Thank you once again. We look forward to all of us being financially fit, hopefully, before we die. Have a great weekend ahead. Cheers. Bye.